So most people, they don't realize, but your business can affect your business loans and debt can affect your personal credit scores. Can you talk a little bit about that? Because I don't think people really know that.
This video is brought to you by EpiPies Academy.
In fact, I mean, I didn't know that before you told me.
Fair enough. I mean, most people aren't credit score experts. But there is that idea of all of the personal guarantees that come along with the business. So depending on how you funded your business and how you continue to run your business, let's say you have a line of credit. And let's say that line of credit is personally guaranteed by you. Let's say you have a credit card. And let's say you're using it for the business, but it's really your credit card. That's the one that I see most often. So it's a business credit card from the standpoint of, for tax purposes, you use it that way. For accounting purposes, it's over here on the business side. But really, when that card was issued, it was issued to you. Well, if that card was issued to you, you're going to start to see it on your personal credit score. Now, if you have this is kind of an interesting anomaly. If you have a business card that you've gone and applied in your Bob's Crab Shack, and you've gone and applied for a business credit card, it's going to have a personal guarantee almost every single time. But because it's a business credit card and it started as a business credit card, it generally will not report on your credit report, which, depending on how you're doing with it, is a good or bad thing. You know, if I have a credit card, you know, a lot of times I want it to report because I want that good credit juice that's coming from, you know, the fact that I'm making payments on time. But those business credit cards tend to not report until you default. So if you have a business, the system is not made for the little man. So if you have that business credit card and you've defaulted, if it's never reported before, all of a sudden now you're going to see it. You're going to start to see that on your personal credit report because it's personally guaranteed. So they're allowed to report it. So that's how you're going to see the things that are going on in your business affect your personal credit. And for a lot of people, what they've done is they've been using their personal credit to fund their business. And so sometimes they'll see their personal credit score drop because they have so much outstanding credit. So one of the elements of a credit score is how much you're allowed to have in credit and how much you're actually using. So, you know, if people have extended you $100,000 worth of credit and you're only using $20,000 worth of it, that's good for the algorithm. But if they extended you 100 and you're using 99, they hate that, right? So that'll start to drop your credit score. So if you're funding your business that way, you might see a drop in your personal credit score as well.